8:30, 2011, 12 minutes after the closing bell. So it'd be 1:12 Pacific Standard Time and 4:12 Eastern Time. How nice that is. One of the things that we would like to point out on the S&P 500 daily chart in the SMF platform, which is a different platform than any other one that you'll see, we'll show you our platform. We'll also show you a standard one. One of the things that I'm going to tell the MMTs is that when we calculated it out, 12.17 is a half delta movement tomorrow. When we were doing the training over the weekend, this was 17.6, I believe, per line, meaning that we have contracted at not a high number but a lower number per half delta line. And what the platform does, it'll price in that current volatility that people hate and don't understand. And what I'm going to tell you is that the other side of looking at this coin going into tomorrow is that the half delta up is 1225 and the full delta is 1237 on the S&P left in the move, and a 1249 is 1 1/2. And to get to the half tomorrow, you're going to have to get to the full delta, you're going to have to go up another 24 handles, but you close at 12.92 on the S&P. That's this closing price right here, up 0.23% on the day. Now, what's going to happen is, in this format on a daily, that each one of these lines are 100% price accurate based on the SMF pricing control market maker platform with many things that are built in it. So when we start looking at this half up bar, this is 1229.89 on the S&P. We have a ADP report and a jobs challenger report coming out. We have a major number coming out on Friday now, and that's going to be your monthly unemployment report. Also, let us not forget about the PMI and some other economic indicators. Let us not forget today that the consumer confidence dropped from 50 down to 44. That's what this administration has done to people. Otherwise, you wouldn't have that low confidence level. Low confidence levels are also a perfect time when market bottoms get put in. It keeps people on the sideline and they don't get the wonderful moves. That's the kind of psychological damage that it does to people that are very confused or uncertain, or what do they believe? They don't know what to. And that's why the confidence numbers have hit levels. They're very low levels. And they dropped from 0.50, which was, you have to go back to 1980 or somewhere in there to see levels, I mean, that low. But now we've even gone lower. And it's a good time when markets put in bottom. We put a short-term bottom in from the selling up here. Classical, I run, I test, and I run, and it's kind of like a W pattern here. The diamonds are ascending in value, so you know that the strength is there. We're going to come up to this half bar. It's going to be a major level, 1229.89. When we move up the ladder, this is going to be a 1270 bar that was set on 8/2 of 2011. That's going to be the upper end now, right up in there. We've already set it and calculated it. There is a shallow half bar here that will be 1247.88. Should you clear the 1229, your next level mathematically will be 1247.88. And should we clear that, then the real part of it is going to be where we have the breakdown, but the following day, it's going to be this 1270.30 handle on the upside of resistance. So it's very coherent. It's very mathematical. I mean, you know, we had a good run up to the high of 1220 now. And we had factored that in over the weekend training. Now let's get in down and dirty. This is what a standard one looks like. That's a W pattern. I mean, what am I going to think about it? The daily simple moving averages have moved up. That's a daily technical indicator that people look and make decisions on. And there's the 20-day still climbing down, and you've had ascending MACD bar. So what? The thing of it is what we talked about below here was called the CBO Market Volatility Index. How that index had peaked in the cycle when we were peaking at the bottom, we already know that. We went through them trades. Then we had the volatility as it should be. And then a complete reversal and another little bit of volatility. But each one of the volatility highs were lower. And we talked about the last trading days of August. So when we were doing our Sunday trading, not this weekend, the prior weekend, and then we had all of last week's the previous week, we had all that price action, and now we're up into this week, but we do have a lot of major stuff coming out. There is very, 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 very light volume in these up moves. And just like any market, I mean, anytime you go down, just like when you made lows over here at the same kind of pattern right here on the S&P. And we went up, we came down, but look at here. This is where we made that lows. And it's all on stockmarketfunding.com. Type in indexes in the search box. You'll see all the live analysis. But you'll know what happened, why. So when you're looking at this, MMTs, we come up here and we hit those targets. I had just drawn some standard technical horizontal resistance lines. They come out pretty darn accurate to our platform. Our platform is 1247. Another one over here that's 1228. This trend line. The other one in our platform was like 1229 and something. And then getting up here. And then what happens is when we fail, if we fell into resistance here, we're going to make a bottom here. And that we called for a 25 handle on the fear factor, because the fear factor makes a peak and this makes a bottom, and people that are left on the sideline just don't know how to manage through the sequence of events. And that's okay. You can start now by getting on board and take accountability and get here with this live analysis so that you do have a plan and you would have a way to go and things would change as far as how directional market movements really happen versus the confusion that a lot of people have about bottoms. Hey, a bottom is a bottom and they go up. And we had a beautiful little rally there, and that was your summer rally over this 2011 period. I gave it up miserably. The point of it is, we tick down higher here. We're going to go up into those resistance channels that we talked about. And there is another trend line over here at 1262. I think in our model it's 1270 on the SMF one. I'm just updating that we have been on the course. We have the first breakout. We had the test of support and the 3-day consolidation. So when you go back to the last 5 days, it starts 1 day here, 2-day, 3-day, 4-day, and tomorrow's going to be the 5th day. So we're going to be taking a look at that. This breakout here is a 3-day daily breakout. And when you have a 3-day daily breakout, it's when you consolidate that 3-day high up here. So what we would be looking for is that this goes down in value, because as this falls in value, stocks bounce off support levels. That's all the training and everything that we have done. And what is going to end up happening here is that the bullish case turns around by the public when they start seeing that the daily simple moving averages are starting to flatten out and if they cross above. However, the rest of the calendar week is going to be front end loaded with some pretty severe economic data, and we're in a holiday week, and we're about to change into a major seasonal new pattern. MMTs, it's very important for you to know that if we come up and hit the wall of resistance at any one of these numbers, the put options will come into play. and that in the short term put to call ratio standards in that market, which also verifies these bottoms that hit to 52-week low bottom, as we know, and you can see throughout the bottom breakout 1, 2, 3, 4, 5, 6 days. This is a very narrow day as far as the standard stuff, but you can see the accumulation in here, and that prices were accumulated. And you can see here that prices were accumulated as well. That diamond is where that bar closed. That's that little doji right here. So you can see where the bottoms were put in right here and how we came back up, but we got a closing price above this right here. That was 12. This was, I'm sorry, I got the wrong number, 1173 in here. And basically when we cleared that, 1173 on this upside right here, let me take that out of the way. That's that candle, but look at the upside candle and look at, you have 1, 2, almost 3 half delta moves. That's a pretty big breakout bar, all right, in our platform. So we can clearly see that I'm going to show you another one that we'll be looking for here, is how this part of it, and I'm just going to use this view here, is that 1229 tomorrow is the key. The fear indicator must stay lower. Everything is on course from the double bottom breakout, the consolidation with the upside move, the greater half delta expansion in our platform, the continuous rising daily IR, which closed at 70, and the current half bar support is going to be 1194.10 here. That's going to be your first area of support. This previous bar right here, way down here, is 1158.57. That's going to be your next area of support. These here are also daily moving averages, and they have flattened out mathematically. As a matter of fact, we have a formula between the MA10 and 20. MA10 and 20 equal. Here, it's doing the right thing. The value is going the right way. So anytime at support level during the last few trading days, we would look at buying support. But remember, we're heavily going to be dependent on headline economic news with the last couple of days of August. Once we hit the last trading days of August, September starts, but the traders don't come back until after the weekend. And not only that, it's really going to pick up again. I would stay tuned if I were you. The whole reason for this analysis here is it's important to understand that when fear comes down, people are feeling good. You can see it. Fear comes down and things go up. Bear and bull put to call ratios and lots of other factors are involved. I will not go into that right now in this particular video with MMTs. MMTs have been told about those various factors. We will discuss it tomorrow morning in the live trading room.